Hi everyone, today we'll be going over accounts February-March 2022, paper 2-2, question number 3. This is structured paper 2, which consists 4 questions, 2 of 30 marks and 2 of 15 marks, and we are also given a time limit of 1 hour 30 minutes. And since question number 3 is of 15 marks, we will be attempting to solve this question under 15 minutes. So without any further delay, let's get started. Bipin, Feroz and Neeru have been in partnership for many years, sharing profits and losses in the ratio 3:1:2. So out of 6 parts, 3 parts of profit will belong to Bipin, 1 part will belong to Feroz, and 2 parts will belong to Neeru. Then Feroz decided to retire from partnership with effect from 1st January 2022, and on this particular date, the statement of financial position was available. Alright. Then we are also given additional information. Non-current assets were revalued at 155,000 and inventory was revalued at 13,160. Okay, so let's figure out the profit or loss from the revaluation. Okay, now let's look at other information to see if we are given any other revalued assets. Then for the second information, we are given that goodwill was valued at 39,000 and it was agreed that a goodwill account was not to be maintained in the books of partnership. Then Bipin and Neeru agreed to remain in partnership, sharing profits and losses equally. Alright, now the profit sharing ratio for Bipin and Neeru would be 1:1. And on his retirement, Feroz agreed to take a non-current asset at its valuation of 15,000. He agreed to leave the remaining amount due to him as a loan to the partnership. Okay, so let's figure out our profit or loss from revaluation. So let's have a look at the total non-current assets. Previously, it was 132,000 and then it was revalued to 155,000. So there was definitely revaluation upwards, right? So revaluation upwards is always a profit from revaluation. So let's figure out the profit from revaluation for non-current assets. That's 155,000, which is the revalued amount, minus the previous amount of 132,000. And this gives the profit on revaluation on non-current assets to be 23,000. Now we need to repeat the same process for inventory. So previously we can see that inventory was valued at 17,560 and now it was revalued at 13,160. So there is revaluation downwards, which means that this is a loss on revaluation. Let's figure it out. That's just going to be the previous value of 17,560 minus the new revalued amount of 13,160. which gives the loss on revaluation of inventory to be 4,400. And we can see that the profit amount is definitely greater than the loss amount, so there is a profit on revaluation. So that's profit on revaluation of non-current assets of 23,000 minus the loss on revaluation of inventory of 4,400, which gives the total profit on revaluation to be 18,600. Alright, so now we can have a look at our first question. We need to prepare the partner's capital accounts to record the retirement of Feroz. And whenever we're talking about a capital account, we always start with the opening balance on the partner's capital account, which is given in our statement of financial position right here. So we can see the capital accounts. For Bipin, it amounted to 72,000. For Feroz, it amounted to 44,300. And for Neeru, it amounted to 57,000. And since we're talking about a capital, the opening balance will always be recorded on the credit side. So let's record these 3 amounts in our capital account under the heading of opening balance. Alright, so that will be recorded on the credit side. We can term it as balance BD. And as we saw above, Bipin had the amount of 72,000. Feroz had the amount of 44,300. And Neeru had the amount of 57,000. Okay. Then we also figured out that there was a profit on revaluation, right? And this profit on revaluation should be shared among the partners. And since this is a profit, this would definitely increase the capital balances, right? Which means that our profit on revaluation should be recorded on the credit side. Now we just need to share this profit among the 3 partners, Bipin, Feroz and Neeru, on the basis of their profit sharing ratio, which is 3:1:2. So let's figure out the profit for Bipin. That is just going to be 18,600, which is our entire profit on revaluation, and 3 parts out of the 6 parts belongs to him. So that's times 3/6, which gives the profit on revaluation for Bipin to be 18,600 times 3/6, which is 9,300. Now we repeat the same process for Feroz. That's the total profit of 18,600 and 1 part out of 6 parts belongs to him. So that's times 1 by 6, which gives us the profit on revaluation for Firoz to be 3,100. Now for Niru, that's going to be the total of 18,600, and 2 parts out of 6 parts belongs to her. So that's times 2 by 6, which gives the profit on revaluation for Niru to have the amount of 6,200. Now we record these three amounts on the credit side of the capital account under the heading of profit on revaluation. Let's do that. So that's profit on revaluation. And for Bipin, we figured it out to be 9,300. For Firoz, it was 3,100. And for Niru, it was 6,200. Okay. Then we are also given information regarding goodwill, right? And we were told that goodwill account was not to be maintained in the books of partnership, which means that this total goodwill should be divided among the 3 partners and recorded on the credit side. And then since Firoz is retiring, now this amount of goodwill should be shared among the remaining partners, Bipin and Niru, and be recorded on the debit side of the capital accounts. So first of all, let's divide this among the 3 partners on the profit sharing ratio of 3:1:2. For Bipin, that's going to be the total goodwill of 39,000, and 3 parts out of the 6 parts belongs to him. So that's times 3 by 6, which gives us the goodwill for Bipin to have the value of 19,500. Similarly, for Firoz, that's going to be the total goodwill of 39,000, and 1 part out of 6 parts belongs to him. So that's times 1 by 6, which gives our goodwill for Firoz to have the amount of 6,500. And for Niru, we have the total goodwill of 39,000, and 2 parts out of 6 parts belongs to her. So that's times 2 by 6, which gives the goodwill for Niru to have the amount of 13,000. And now we need to record this goodwill amounts for the 3 partners on the credit side, since this is based on the old profit sharing ratio before Firoz left the partnership. Let's do that. So that's goodwill on the credit side. And for Bipin, we figured it out to be 19,500. For Firoz, we figured it out to be 6,500. And for Niru, we figured it out to be 13,000. Okay, now we need to record the goodwill on the basis of our new profit sharing ratio for the remaining partners Bipin and Niru. Let's have a look above. We were told that Bipin and Niru agreed to remain in partnership, sharing profits and losses equally, which means that their profit sharing ratio is 1:1. So this goodwill value of 39,000 should be shared among Bipin and Niru equally. So that's just going to be 39,000 divided by 2, which gives the goodwill value for Bipin as well as Niru to have the amount of 19,500. Let's record this in our capital account on the debit side. So that's 19,500 for Bipin, no amount for Firoz since he already left the partnership, and 19,500 for Niru. Okay, then we were also told that on his retirement, Firoz agreed to take a non-current asset at its valuation of 15,000. Since he's taking over the asset, he obviously needs to pay this amount to the partnership, right? And while paying this amount, this will definitely decrease his capital balance, which means that this takeover of non-current assets should be recorded on the debit side of the capital account. Let's record it. So that's going to be non-current asset. And the value was 15,000. Okay. And we know that Firoz is leaving the partnership, which means that his current account should also be adjusted in the capital account. Let's have a look above. Since Firoz is the only one leaving the partnership, only his current account balance should be adjusted to his capital account balance. And we can see that Firoz's current account balance is 1,980, but it is given in a bracket, indicating that this is the amount that Firoz owes towards the partnership business. This is the amount he needs to pay back, which means that this will definitely decrease his capital account balances. So the current account balance of Firoz will be adjusted on the debit side of his capital account. Let's do that. So we have current account with the value of 1,980. Okay, let's have a look above again. We adjusted all of these information as well as our current account balances, which means that we included everything that we needed to in the capital account. So we can move towards figuring out the closing balances for Bipin and Niru. And for Firoz, we were given additional information. to indicate that he agreed to leave the remaining amount due to him as a loan to the partnership. So the partnership does not have to pay back that amount to Firoz right now. That amount will still remain in the partnership as a loan. Okay. And since we're talking about the capital account, the closing balance will obviously be on the debit side. So that's balance CD. And for Firoz, the closing balance will actually act as the loan given towards the partnership. So that's loan. Okay. And we can see that both the balancing figures are on the debit side. And in order to figure these values, we first require the total amount, which we can figure out from our credit side. The total for Bipin would be 72,000 plus 9,300 plus 19,500, which gives the value of 100,800. The total for Firoz would be 44,300 plus 3,100 plus 6,500, which results in the value of 53,900. And for Niru, the total will be 57,000 plus 6,200 plus 13,000, which results in the total to have the value of 76,200. And the total will be same for debit as well as credit side. So let's copy these amounts towards our debit side as well. That's 100,800, 53,900, and 76,200. And for Bipin, the closing balance acts as the balancing figure, and whenever we're trying to figure out the balancing figure, we just subtract this amount from the total. And in this case, that's going to be 100,800 minus 19,500, which results in the closing balance for Bipin to have the value of 81,300. And for Firoz, since he left the partnership, his closing balance will be the loan, and this loan will act as the balancing figure in this case, which means in order to figure out the value for loan, we need to subtract these amounts from the total. That's 53,900 minus 15,000 minus 1,980, which gives the loan left towards the partnership by Firoz to have the amount of 36,920. And for Niru, since she is still a partner of this partnership, her closing balance will be the balance CD, and this will act as a balancing figure, right? So we need to subtract this amount from the total in order to figure out the value of the closing balance. So that's 76,200 minus 19,500, which results in the closing balance for Niru to have the amount of 56,700. Alright, and we know that these closing balances will act as the opening balance for next period, so we need to record that as well. That's balance BD, and Bipin will have the amount of 81,300, and Firoz is no longer the partner, so he is not going to have any closing balances, right? And for Niru, the opening balance would be 56,700. Alright, this concludes the capital account as well as the first part of this question. Now we can move towards the second one. We are given additional information. Bipin and Niru have agreed the following for the new partnership. They will no longer use current accounts. Okay. Each partner's current account balance is to be transferred to the partner's capital account, and then the opening balances of their capital accounts are to reflect the new profit and loss sharing ratio. If you remember correctly, the new profit and loss sharing ratio was 1:1. So the opening balances of the capital account should also be equal. Then Niru was to introduce or withdraw funds in order to achieve this. Alright, for the second part, we need to calculate the amount Niru should introduce or withdraw. In order to figure this out, first we need to adjust the partner's current account balances to their capital account. Let's do that. So we have Bipin and Niru. And we will start with their closing capital account balances. So that's capital account balance. Let's have a look above at our capital account. We can see that for Bipin it was 81,300 and for Niru it was 56,700. Let's write these amounts. That's 81,300 and 56,700. Now we need to adjust the current account balance. Let's have a look above at our statement of financial position. So the current account for Bipin has the amount of 4,240, which is a positive amount, which means that this is the amount that he gets from the partnership account. So this definitely increases his capital account balances. So we are to add this amount. Let's do that. That's 4,240. Now let's repeat the same process for Niru. We can see that Niru's current account has the balance of 2,750, but in a bracket, indicating that this is the amount that she needs to pay back to the partnership. So this will definitely reduce her capital account balances, right? So we need to subtract this amount of 2,750. Let's do that. That's 2,750. Okay. Now let's figure out the total. The total for Bipin is 81,300 plus 4,240, which results in his new capital account balance to be 85,540. And for Niru, that's going to be 56,700 minus 2,750, which results in her new capital account balance to have the value of 53,950. We can see that we were asked to calculate the amount Niru should introduce or withdraw so that their new capital balances were equal. And we can see that Bipin's capital account balance is definitely greater than Niru. So in order for their capital balances to be equal, Niru needs to introduce some additional capital, right? So let's write it down. Niru capital introduction. So she needs to introduce the amount so that her new total will be equal to this amount. So that's 85,540. And now we can consider Niru's capital introduction as a balancing figure. And in order to figure this out, we just need to subtract this value from the total. So that's 85,540 minus 53,950, which gives Niru's new capital introduction to have the value of 31,590. And this concludes the second part of this question. Now we can move towards the third one. We need to explain one reason for valuing goodwill when a partner retires. So valuing goodwill will ensure that the retiring partner will get his or her contribution to the success of the business. Let's write it down. It will ensure retiring partner is rewarded for his or her contribution to the success of the business. Alright, this concludes the third part of this question. Now we can move towards the fourth one. We need to state two reasons why it is usual not to maintain a goodwill account in the books of a partnership. So the very first reason would be that the value of goodwill is subjective, because the inside parties or the partners of a partnership may view the value of a goodwill to have a certain number, whereas maybe some other people may believe to have a different number, right? So this is a very subjective matter. So that is the reason why it is not maintained in the books of a partnership. The value of goodwill is subjective. And the second reason would be that the goodwill value may fluctuate according to the performance of the business at different times, right? Maybe this year the business is booming and it might have a very high goodwill value, but in the future years, maybe the business's performance may not be so good, which means that the goodwill value will also decline. And this is another reason why goodwill account is not maintained in the books of a partnership. Let's write it down. Value may fluctuate. Alright, this concludes the fourth part of this question as well as this entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.